Welcome back, everybody, to another webinar organized by Princeton University's PCF. We're very happy to have Arminio Fraga with us. Hi, Arminio. Arminio will talk about Brazil's perfect storm. And as usual, I will give some introductory remarks, and then Arminio is taking over. So let me just remember, everybody, what happened last Friday. Last Friday, Bob Shiller was talking about narrative economics and the connection to COVID, to the COVID crisis. Today, Arminio will talk about Brazil's perfect storm, and we know that Brazil is suffering particularly hard from the COVID crisis, and also we will focus here on the economic implications as well. That relates to earlier webinars we had with Geeta Gopinath, who was taking very much a global perspective coming from the IMF. We will have later Raghu Rajan, who will also talk more from the emerging market perspective, so with an Indian lens on it. And it also relates to a very early webinar we had with Hyun Shin, who was talking about the original sin redux. And we will come back in the poll question about this concept as well. The next Friday, we shift gears a little bit. Next Fridays, we will talk about climate change and climate policy, and Richard Zeckhauser will talk next Friday. So let me introduce the topic slightly. For today's talk, I will actually base my thinking here on the integrated policy framework, a safe asset perspective, a paper I wrote with Sebastian Merkel and Yuli Sannikov recently. And what the emphasis here is that for emerging market economies, there's a risk-on, risk-off regime, which is very, very important. And the flight to safety, in our view, is a very, very important concept to understand. And to what extent there is a danger that there will be flight to safety depends very much on US monetary policy and has huge spillovers on emerging market economies. So typically when you're in a risk-on phenomenon, so actually everybody is happy to take on some risk, then it typically is the case that firms and banks, domestic firms, domestic banks, they actually tend to issue US dollar debt because it has a lower interest rate. And they don't internalize by issuing US dollar debt, you actually make yourself more vulnerable to sharp movements in the exchange rate. So that's an externality, a pecuniary externality they don't internalize. To compensate for this, the official sector can hold US dollar reserves. So the private sector is going into US dollar debt, while the official sector is holding US dollar assets. And it can also, do some anti-Keynesian monetary policy, meaning that whenever there's a crisis or whenever there's a recession and there's dollar outflows, you defend your currency and you hike the interest rates. So whenever there's a recession, you hike interest rates rather than lower interest rates. And the third element, so besides firms and banks and the official sector, you have the citizens in the country, and they hold, they hold the local currency, they hold the real, and as domestic safe asset because it's closer connected to their inflation, what they are facing, the risk they are facing, the inflation risk they are facing. So that's in a world where there's the risk-on phenomenon, but then there might suddenly be a shift to a risk-off phenomenon, and when the risk-off phenomenon occurs, then everybody is rushing out. The firms and the banks might not be able to roll over their dollar debt, and they rush to prepay them and liquidate their other assets and even physical assets. And even citizens might rush and hold US dollars as a safe asset rather than the local currency, the domestic safe asset. And when this happens, then actually the exchange rate collapses, and that actually makes it even harder for the firms and the banks and everybody who has US dollar debt to pay it back. And that also amplifies the whole setting. And that occurs, as we show, when you lose the safe asset status, it doesn't occur in a smooth way. It typically occurs in form of jumps because it's a multiple equilibrium story here as well. When you lose your safe asset, there's an equilibrium where there's a domestic safe asset status, you enjoy it, and when you lose it, you jump to another equilibrium where it's much worse. You don't enjoy the domestic safe asset status anymore. Now, there are two effects of the currency depreciation. One is, of course, your exports and imports are affected. So exports are easier to do, imports are getting more expensive. That feeds into inflation. And also, it is the case that when you have US dollar debt, the debt burden is actually becoming much more pronounced, and that leads to balance sheet impairments across the whole economy. Of course, it depends to what extent there's dollar debt outstanding in the economy. And there's a famous saying by former finance minister in Brazil, inflation hurts. I think it's actually borders, but the foreign exchange rate kills. I made it from borders to hurts because as a German, you're always very worried about inflation. Now, Brazil, when Arminio was in charge, had to follow very much an anti-Keynesian monetary policy, defend its currency in times of crisis. But the situation has changed, and we have to see how the situation is currently. Of course, if you do an anti-Keynesian monetary policy, you amplify the volatility of the GDP growth. So, and that's why it is the case that Brazil has a high volatility in GDP as well, on top of a low growth rate. So what happens right now in Brazil, there are some positive elements, and I would like to stress the positive elements here as well. So you have very low inflation at the moment, so that's something good. So even though the real lost a lot in value compared to the US dollar, it is the case that the inflation rate is very, very low at the moment. And it is also the case that previously the interest rate in real was pretty low as well, that firms actually tended to repay the US dollar debt. So the US dollar debt is actually not so dramatic as it was beforehand. And the banks are actually even long in US dollars on average. And on top of it, and that's also, I guess, part of the achievement of Arminio's and others, that there's huge dollar reserves. Brazil has huge dollar reserves. So if you put this all together, the second channel, which was this dollar debt burden channel, is actually not so important anymore. You can actually focus here on the first channel here much more efficiently. But of course, there's one element which you still have to keep in mind, is that the citizens hold the domestic bond, so the real denominated bond. So it's in real. So that's essentially, that's still something, and they might not be willing to roll over the existing government debt all the time. So what you can see, of course, when you see on this graph, it's quite striking. Brazil is a very interesting country for many, many reasons, not only for cultural reasons, but also from economic perspective, because it has a extremely high real interest rate. So if you see it, the real interest rate, that's this line here, this curve here, was, in the early 2000s, it was more than 10%, sometimes 13%. That's an extremely high interest rate. Of course, the nominal interest rate, the red line is, the red curve is even higher. And the difference is the inflation. And what you can see that the real interest rate came down significantly, and that actually eases the burden to pay off debt to some extent. But the question is, how long can you sustain and how long you will enjoy the possibility of a low real interest rate? And of course, the inflation rate, as you can see, came down significantly as well in the last 20 years. Now, what's about the flight to safety into US dollars? So if the citizens decide not to roll over the huge government debt, and Arminio will talk about that. What's interesting about the debt structure is that a lot of this, you can't inflate it away very easily because it's inflation indexed, a large fraction of it. Then there's also a large fraction which is actually done with floating interest rates. And the remaining part has very, very short maturity. So there's no long-term debt you can easily inflate away. And you might say that might be actually a good thing, though there's never a temptation even to inflate it away because it's not so easy. On the other hand, any of these debt claims promises only cash or money or reserves. So what you get some money or reserves, and you can still inflate the money and reserve away. So the big issue here is, will there be a flight to safety by the citizens, by the Brazilian citizens, into some other assets? It could be into the dollar. If it's into the dollar, it depends very much on the dollar interest rate, so the monetary policy in the US, and it also depends on the FX rate, the exchange rate. So if the exchange rate is very low, so the real is very weak, then it actually is much more costly. So your lower exchange rate might be actually preventing people from running into the US dollars. But in generally, you have to defend your currency domestically, so it's much less defense internationally, which was, you have now the reserves and all this thing, but you have to have off equilibrium credibility where you can say, oh, if there's a run, you can actually bring your fiscal situation in order. And that doesn't depend very much whether you have monetary dominance or fiscal dominance. So if the central bank is in charge, the central bank can hike interest rates and then actually make sure that the primary surpluses are getting in order. So if there is monetary dominance, and this depends very much how independent and how powerful the central bank is in Brazil in order to enforce fiscal consolidation. If you have fiscal dominance in general, you also need a credible fiscal plan in place in order to avoid, at least to have a credible plan in place if the first signs were to show up, how you would react to that. Of course, the ultimate control would be some capital control outflows, and Brazil has a lot of experience with capital controls, mostly focused on inflows, but here would be a huge control on outflows. And if you want to, go back to something like financial repression, which, has a lot of other side effects, negative side effects. So that's essentially my brief remarks. And as usual, I would like to end with a poll question. And the poll questions are, you can choose more than one answer. Is Brazil economic in a better situation in this crisis compared to the previous crisis because of better reserve holdings and it has less dollar debt outstanding? Or do you think this really didn't help much because we are back what the BIS and Hyun Shin and Augustine Carsten called the original sin redux? So this didn't, we still have problems on the FX market on this side. And the second question is the low interest rate, so the low real interest rate is a good thing and a big benefit to manage the current economic crisis? Or do you think it's not a good thing? It's more like what Larry Summers calls the secular stagnation, saying, okay, we have a secular stagnation showing a low interest rate, and the low interest rate, a real interest rate, is a problem. And it's just at least a problem on its own, or at least signals a low growth rate, and that's a problem on its own. You can also pick, again, more than one question. Of course, here it's a little bit hard to pick both. And then what's about the loss of domestic safe asset status? Would an independent central bank help? Or, do we have fiscal dominance anyways, in a sense that, in Brazil, at the end, ultimately, the fiscal authorities will call the shots, and hence independence will not make such a big difference. So I'll let the polls run for a little bit longer. If you can do it in 10 seconds, it would be great. And then I will announce the results fairly soon. Okay, so what the first answers, Brazil's economic situation is better now because we have reserve holdings, 52% think, and we have less US dollar debt, 47% think. No, we have the same problems. We have the original sin redux situation, that's 32% think. So you can pick more than one answer. That's why it adds up not to 100%, but the majority thinks the reserve holdings is a good thing, and the less dollar debt is also a good thing. But a third, or 32%, think is still the case that we have the original sin redux, so the exchange is still a problem. About the low real interest rate, it's a good thing, 81% think, and it's a bad thing is only 26% think it's a bad thing. And finally, what's about the central bank independence? Does it help to preserve the domestic safe asset status? 61% think that it has helpful, while only 49% think the fiscal dominance will come anyway, so the independence doesn't really help of the central bank. So with this, I pass on the screen to Arminio, and we're looking forward to a great take about the perfect storm, which gives it a very negative perspective already about the Brazilian situation. I hope I was not too positive on this angle.
No, well, let's do a poll at the end. See what people think. Markus, I'm delighted to be here. Great to be back to Princeton, even if through these COVID means. I'm also delighted that this is co-sponsored by the Brazil Lab, this wonderful new initiative that I'm associated with at Princeton. It's an old dream of mine that we would have something like this at Princeton at some point. Now, I picked this perfect storm title. It's pretty much the way it feels down here. I'm going to spend a lot of time also discussing why Brazil is falling, or really has fallen behind to provide some context. I'm not going to do a very technical rendering, but we could discuss things with your framework later if you want. Now, big difference between Brazil and most places in the world, or many places in the world, as we deal with the pandemic, is that unlike, say, the US or Europe that have been enjoying the recovery for quite some time, Brazil was just out of a massive recession. So Brazil had a 7% decline in GDP starting at around 2015. Then there were 3 years of sort of very weak recovery, particularly when coming from such a deep recession. And then here we are again, another drop of 7%. So it's pretty dramatic. And moreover, this is how I want to start. If I can manage to move my screen. Okay, so besides the short-term troubles we've been going through here, there's also a long-term issue that I wanted to highlight. Some people don't quite see this much. And it basically has to do with a country that has not been converging. We've had some moments of fast growth, but we've also had some very bad moments. And what you get is what you see on the screen here. This is Brazil's GDP per capita divided by the US's. And you see we had a good run, say in the 50s, 60s, 70s. And then we blew up. And then we had another good run, and then we blew up again. And the bottom line is, if you go back 60 years, we have not reduced the distance that separates us from the US on a ratio anyway, which is very frustrating. In theory, as we all know, a country like Brazil has a lot of room for improvement. It's very intuitive. You can invest more, you can improve your education, improve your institutions, all kinds of things. And we ought to be growing faster than those countries that are at the frontier. So anyway, so it's a story of, if you go back to 1980, it's really a story of divergence. And if you go back, as I think one should, and you count the collapse as part of the same economic story, then you're kind of flat. And why? What happened? What went wrong? So Markus, switch. What went wrong is we picked the wrong development model, and I'll try to speed up a bit here. We had a model that was kind of, at the time, old-fashioned in a way already. And it was a closed economy, import substitution model, no focus on education, really, no focus on inequality. And you had the state very involved in the production side of the economy. And moreover, a lot of macroeconomic instability. And in the end, what started out as import substitution stayed. So it was an idea that was not really infant industry protection, was something else. And I think disconnected Brazil from kind of the fast track of global economic progress. Of course, people are never happy when the model starts to fail and things slow down. So Brazil kept on pushing, particularly on the demand side, and it was textbook. Brazil blew up more than once, had balance of payments issues, inflation, hyperinflation, you name it. Let's switch.
So Arminio, are you saying Brazil could have taken the Chinese approach? Are you still proposing they should do something like the Chinese approach? Or is
Not
this
really, no, not really. I mean, the Chinese approach, in my view, has been much more sort of brute force, 45% of GDP savings. And you can make a lot of mistakes if you save that much. Now, we were never that virtuous. So we needed to go more the Occidental way, maybe Chile been doing it well. And we didn't. So we struggled. We had this, what we know down here, we call the lost decade. But then since the 90s, there was progress. We finally managed to get rid of hyperinflation, restructured our foreign debt back in the early 90s and started opening the economy. There was a lot more focus on education. At that point, I think the main achievement was to put most kids in school. Quality of education is another story. I'll get back to that. There was also an important focus on health. There was some very important successes from our single universal system, which is mirrored after the British system. A lot of success in important areas. And so a plus. And a fair amount of privatization and better regulation. And in the end, the bottom line was inflation was always very damaging for the poor. That helped. There were good quality anti-poverty programs, particularly the famous Bolsa Familia, direct transfers, so extreme poverty declined. There was some reduction in inequality and some growth. And in fact, I at the time thought Brazil was going to make it. Now we're talking now here, the beginning of the Lula government. So Cardoso stabilized things and did all the things that I'm listing here. Lula came in and surprised most of us in pretty much keeping with the program, at least for a while. And I thought Brazil was going to make it at that point, quite frankly, but it didn't. It turned out not to be the case. Let's page, Marcus. The trouble was starting in Lula's second term, but particularly when he was succeeded by Dilma Rousseff, Brazil kind of went back. It had this attack of nostalgia of a model that didn't work, which always seemed to me kind of strange. Not just in its ability to sustain growth, but also in the inequality front. It turned out it was a very, very regressive model, but nonetheless, Dilma Rousseff kind of went back with this, what she liked to say in Portuguese, spending his life, providing massive credit subsidies all over the place, tax breaks. So it's very much a sort of old-fashioned industrial policy, done in extreme fashion. All the hard-earned macro stability, fiscal responsibility, there was an achievement of kind of the turn of the century, went down the drain. Not surprisingly, the economy failed. It failed because it had very bad macro policies. And it failed because it had very bad micro policies, so it's no surprise. So productivity went down, and we went back to being a crisis-prone place. Page, please. There was a massive fiscal collapse. You can see it here. After the Real Plan, there was a very important and very, very structural adjustment in the fiscal accounts of Brazil, the budget, the federal budget, but also the states. They were a main source of instability. But all this was abandoned, and you have it on the screen. You can see it better than me speaking. But it was a 5 to 6 point of GDP fiscal collapse, not followed by any type of expansion of the economy. So it was clearly a recession-prone, recession-driven fiscal expansion. People don't like that, but that's what we had in Brazil. There was why the total loss of confidence. Let's move forward. And the debt started to grow. We had government debt at around 50% of GDP, went up to 75%. And we dove into this very profound recession. Keep moving, Marcus. I here have just one quick screen on subsidies. I mentioned the subsidies. Our subsidies are all over the Brazilian economy. They were substantial in the credit world, the National Development Bank being the main provider, but there were also all kinds of tax benefits that were part of the Dilma Rousseff strategy. And these subsidies added up at one point to 6.7% of GDP. You can compare that with half a point of GDP of the Bolsa Familia. It's slightly unfair comparison, but nonetheless, these were mostly regressive subsidies that led to nothing, really. I'm not going to dwell on it too much, but if you could switch one more page.
It seems like it stabilized. I mean, it went down from 2015 onwards.
It went down. The main decline was a combination of reforms done at the National Development Bank and the interest rates. Now, the subsidy is calculated using a market rate minus the rate at which they were providing loans. So there were reforms that moved rates towards market rates. That was the main thing that led to this decline. And this, by the way, is below the line. This BNDES subsidy does not appear on the standard budget numbers, but nonetheless, it has an economic impact, and it has an impact on the allocation of capital and all that. So I just show you this because it's big. Now, not surprisingly, part of the collapse in the economy came also on the investment side. And Brazil was never an Asian type investor, sort of investing around 20% of GDP. But recently that number declined to 15. I don't know on your screen, but on mine, the tip of this chart disappears. But that tip has investment in Brazil at around 15% of GDP, which is a very low number. It's impossible to grow very fast with a number like that. Moreover, at the bottom, I include investment by the public sector, and that went from a peak of 5 points of GDP to close to 0. Right now, it's around below 1%. Page, please. So total collapse. The results are as follows. We had during the Cardoso years, Brazil growing at the same pace as the rest of LATAM, which, by the way, I am fully aware is not a very high bar. Then we had the good years, commodity boom under Lula, and Brazil grew faster than the region. And then we had the collapse that I'm describing. 2.25% a year over 7 years is a lot. So that's kind of what we're dealing with. We were dealing with. Page, please. Just before the pandemic arrived, therefore, what we had in Brazil was and still is an economy that has been struggling on the productivity front, and an economy that, while inequality has come down some, still displays very high inequality, and it is right now a very vulnerable economy as well from a macroeconomic standpoint. So now I want to illustrate these 3 points with a few slides before I move closer to the present. On the inequality front, you have here not the most elegant chart I've ever used in my life, but you have Brazil at the top in red, very high Gini coefficient. It was going down all the way to 2016. It's been going up slightly since. I include the other countries here just for a point of reference. You have Chile below Brazil, also quite unequal. And then you have the US with higher inequality than Germany. You probably know that if you have a Gini of 30, that is consistent roughly with an economy where the top 1/3 owns or gets about 2/3 of the income, roughly. That's sort of a linear approximation. All right, page, please. You can look at inequality in other ways. The top 10% in Brazil collects about 45% of the of the income that's very high. We also know now from spectacular research done over the last few years by folks like Marcelo Medeiros, who's now at Princeton, his student Pedro Souza. We've had this forever. It goes back many decades. It wasn't just Dilma Rousseff subsidies. It was there before, or maybe in other ways. Okay, page please.
It's less pronounced compared to the West or the US, is that they're not the top 1% is so outrageous. It's less focused on the top 1%. Is this correct? Or?
Yeah, a little less. I think, yeah, I won't try to guess why.
And but, is it mostly new wealth or is it inherited wealth?
Both more recently, but I'd say for the most part, there's a high degree of persistence. Yeah, I'll have a chart at the end of this run on social mobility. Okay. It's extraordinarily low, but I don't know, and I've actually asked. I've asked some colleagues, including Marcelo Medeiros that I just mentioned, whether we have studies at the very top, and I don't think we do yet. But here's another. So point number one, inequality down a bit, but very high, still very high. Point number two, education. Education in Brazil has been a real serious problem. So here's a chart of schooling, years of schooling. You have the US and Norway at the top, just to give you a sense. But I really want you to focus on the other two. The other two are Korea and Brazil. And you see here, Korea and Brazil were quite close down there, way below the US, way below Norway. And you see, you know, the amazing run that has taken place in Korea, and not quite in Brazil, with average schooling probably still around 8 years, maybe a little higher than that now. Page, please.
Do you think new technology can be of any help in this regard? With all this online education, all this, there could be a big breakthrough coming up in the next decade? Or that's too speculative?
It should. Requires all kinds of other things. But yes, I also think technology will help in health. But we lack a lot of the basics, even to, you know, technology alone doesn't do it. You know, you got to have it.
But most people have a smartphone these days, I guess.
Yeah, no, for that, yes. For that, yes. But you need teachers, you know, that sort of equation. That production function has to be rich, let's call it. Let's move on, please. Another chart on education, very low, very few people in college. Let's move. One more. Government spending, oh wait, please go back. Government spending on education in Brazil is actually not that low, at around 6% of GDP, still higher than our neighbors, although again, that's not a very high bar. The trouble is, and I mentioned most of our kids are now in school, of say 7 to 14, but they really don't get educated too well. That's the sad truth. And if you move to the next one, it's the last one on education. What you have here is a chart where you have on the bottom axis spending per student in dollars, PPP dollars. And then you have the PISA score in math on the left. And you can see that relative to sort of an eyeball relationship, Brazil doesn't get much. And that I think is a real serious problem. I'm not saying we couldn't spend more, but we for sure are underperforming on the education front. Keep going, please.
So why is that? Can you?
That's, I think, it's to do with okay, go back then. Or yeah, you can stay there. It doesn't matter. Yeah, it is a combination of again of a lot of factors, but it has to do with poor management, poor training, and I think it also correlates with inequality as well. Very high inequality. A very substantial number of people are really, really poor in Brazil, and all of those. I can't speak with full confidence on a profound answer to your very important question, but
and is it very different between the countryside and the cities? Is it useful to look at the average if the countryside is so different than the cities?
Yes, but there are some surprises when you do that. What we do see is that places where the school becomes an important part of the life of a community, where people get engaged, they seem to work better. Where there is more management, where you have where you don't have political appointees as school directors, we have a lot of those. Things do well. So you have that, but there's more, and I'd rather not give a long guessing answer, but it's those are the basic issues. Now here, I'm not going to go into this in very much detail, but I have 2-3 charts that you can look at your own leisure that show where Brazil ranks in the World Bank doing business indicators. And here we have a number of emerging markets as a comparison. In Brazil being the red dot, I just want you to see Brazil is low everywhere relative to the other dots. And these are these famous World Bank issues: getting credit, paying taxes, enforcing contracts. So there are a lot of issues in the Brazilian, say, government, regulatory, legal infrastructure that are not working very well. Now, I've always been a glass half full person all my life. I think there's a lot of room for improvement here. So I'm trying to take a positive on this. A lot of room. Next, please.
Do you think the digital revolution can be of any help on this dimension or not?
The what?
The digital revolution, the modern new tech.
I think we need a major reform of the state, which should include technology, but will go way beyond that. Mm-hmm. We need a state that is more transparent, that is accountable to people, where everything the state does is justified, is evaluated, and these evaluations amount to a call for action. Mm-hmm. We need that everywhere. And this then brings us to the politics, but let me save that for a little later. Why it is that we have all these challenges. Let's put it. One more, please. Okay, this is another. Oh, okay, get back one real quick. The other one is the World Governance Indicator. This is also, I believe, quite important. It has to do with also the quality of government, but in a different way, the quality of institutions. We're talking here the rule of law, freedom of the press, regulatory quality, corruption, and so on. And we also rank quite low on a worldwide basis. This is another World Bank chart. One more, please. This one I won't dwell on. Is a similar chart. The only reason I have it is a stepping stone to the next chart. This is another index, this one by the World Economic Forum. It's a global competitiveness index, and Brazil also doesn't rank very high. And then one more, please. And here the one I promised, and this is one that uses this World Economic Forum competitiveness index. You could do it any number of ways, but it's just to show the issue of intergenerational mobility in Brazil being very low. And this is a calculation that's somewhat arbitrary, but it would take 9 generations for a person to move up to the top 10%. So 9 generations. It's a sort of an average, but it shows kind of where we are. There's not a lot of mobility. Sadly, there's no equality of opportunity, and it's something that Brazil must work on. Let's move. Now, all of this will require, and this is if you can't see the right edge of this chart, I might as well skip it. I don't know if people can see it.
I think it looks fine to most of the people.
Okay, then. Okay, so I'll speak about it for a minute. This is an interesting chart because when looking at the need to improve things in Brazil and the need to spend better on socially relevant areas such as health, some infrastructure issues such as sewage and so on and so forth. And in order to do something, therefore, about the profound inequality of Brazil, more investment will be needed. And the issue is, where would the money come from? And this table basically shows how much of government spending goes into pensions and the government's wage bill. And Brazil is at the very top of the scale at 80%. So if you believe, as I do, that Brazil needs to go through a massive change in the way it does things, you have to take this as a hint that there's money to be saved on Social Security spending, and Brazil is still a fairly young nation. It shouldn't be that high. And there's money to be spent making government more efficient and less expensive. If you brought Brazil down to the levels of, say, other middle-income countries to the left of this chart, say 60% of spending, and we spend 35% of GDP, we could save 20 points. So 20% of 35 is 7 points of GDP. So you could do a lot of good, okay? Then if you were to eliminate another 3-4 points of those silly subsidies that I discussed earlier, you get another 3-4 points, all kinds of loopholes in our tax system. Is a regressive tax system. I think you would have the makings of a fantastic change, revolutionary change, really, in Brazil. A few of these things are happening, particularly the 2 points of GDP that were granted by the National Development Bank every year. A little bit is already in the pipeline with a good Social Security reform that was voted a year and a half ago. And then you can probably do the rest and spend more on all the things that might help develop the country, make it faster growing and less unequal. Okay, let's.
You focus very much on total spending, but there's also to give people incentives to become a better teacher, and the worst teacher doesn't get so much pay. If you had to pick between the two, the total spending was incentivizing, better teaching, better administration. Yeah. Which one would you pick? Which one is more important?
I'm on record in Brazil, probably some Brazilians listening here, proposing that we do a reform of the state that would start out with a very, very basic point, and that would be that every single government employee would be evaluated. Mm-hmm. And nobody would be automatically promoted as they are now. You just get promoted because you spent another year in government, you get a pay raise. And there would be discipline, and I think it would be spectacular. I'm not saying you should run the government as you run a startup or an aggressive private sector business. It's different mindset and so on. But it's just startling to me that government employees are not evaluated and they get automatic pay raises every year. It makes no sense whatsoever. I don't think in the short term this would lead to many firings or anything like that. I think this would take 5-10 years. It wouldn't be just part of a badly needed fiscal adjustment. I think it would also mean much higher productivity for our government and therefore for Brazil's economy.
And you were pushing for this already when you were in government? Somebody wants to know.
I was, but not. I didn't. I was governor of the central bank, and we were talking about this. It wasn't clear to me at the time that the numbers I'm showing you were that bad. So I was pushing exactly for that. But the idea of having doing an administrative reform was certainly not invented by me. Cardozo tried early in his term, so we're talking 30 plus, well, let's see, 95-ish. They tried to do something. There are very, very strong political obstacles to doing this. Lobbies and the politics of getting this done are not easy. This is not an original idea of mine, although I believe people weren't paying attention to this number that I'm showing to you here. The other thing people don't know in Brazil is that this can be done without amending the constitution. Mm-hmm. Those who enjoy reading the Brazilian constitution, go check out Article 41. For everybody else, let's move on to the next slide. Okay, so here we are, a perfect storm that is more complicated than what you find most places for the reasons I already mentioned. One, we went through a massive recession. This is like 15% decline in GDP per capita over 7 years. Imagine, we should have been growing a couple points a year. So GDP should be, per person, should be 30, 35% higher. You know, 115 divided by 85. So that's one aspect. Besides the health crisis, of course, there is this, call it cyclical issue, but then I'm trying to convince you here there's something deeper that we just are not, we haven't been able to grow. And we're still massively unequal. Right now, we're also going through I call it a political crisis. The three branches of government are not getting along. And sadly, we have weak leadership. And this shows in many areas. And I'd like to go walk.
Can I just inject one question? Is it that there was an artificial boom and that's why the drop is so much harder? So you have this fiscal expansion that just led to an artificial boost of GDP, which was, you know, not sustainable. Hence the drop is not so dramatic.
Well, the previous collapse, the one of 2014, really 15, 16, had this similarity to the one that we saw 2 decades before, and it was kind of what you just said. You don't have the right model, but you try to keep your car running faster than it can, and at one point it blows up. So it just blew up. The driver just blew up the vehicle twice, and yeah, so that's right. In particular, in Brazil's case, this seemed very, 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 very clear. Now we're going through something that is slightly different, and I want to cover some points here before I finish. And I think I might be taking too long as it is. What are the major risks right now? One is we had another jump up in debt, and we're approaching 100%. I'll show you the numbers. We're still dealing with slow growth, massive social tensions, and now I think I have to add the quality of our democracy is at risk. The system is fighting back, but clearly there are problems. So let me show you some reasons why I believe this is the case. First thing I want to show you is probably the most visible part of Brazil for any non-Brazilian. If you ask most non-Brazilians, first thing they think of when they hear the word Brazil, they think Amazon. And now they think deforestation, forest fires, and so on. And it is true. This is happening, and it clearly has the blessing of the government that really isn't doing much. Another point, for which I don't have a chart, but you have to take my word for it, is that the president of Brazil has been against pretty much every item in a reform agenda that would be necessary to put us back on track. He was opposed to Social Security reform. He is against a reform of the state. And he's also against a reform that his own minister has put before Congress to fix our fiscal framework that we thought was bulletproof, but really wasn't, obviously. Still not sure, by the way, Marcus, whether the fiscal collapse was due to loopholes in our fiscal framework that we cherish so much. We have this fiscal responsibility law, and some of it was just that the law was not enforced. And I think it's probably some of it. Another item for which I have come back. Don't my charts. Item for which I have no chart is a very scary one. Recently, the government of Brazil, through executive orders, allowed the sale in large quantities of unmarked bullets, stuff you put in the gun. And this is very serious. Like you can now, you can shoot one another and have that not be traced. Really strange, really scary. Another one, which now we can switch, is the lack of science in dealing with the pandemic, starting with our president, who made it a point of honor, I assume not unlike another president further north from us, not wearing a face mask. And here we have a photo of President Bolsonaro without a face mask in a rally against Congress and against the Supreme Court. And if you move to the next slide, you will see it's the same rally. And there you have one banner that basically says, shut down the Supreme Court and the National Congress, STF and CN, if you're in the middle. And he was there without a face mask. So, you know, a picture is worth 1,000 words, I'm afraid. There have been also steady attacks on the press, loaded appointments to cabinet with high turnover and targeted turnover. The president's family is being investigated, and this is causing all kinds of tension. So we're going through some very tough times, I'm afraid, and there's no way you're going to have long-term investment kicking in under this kind of tension. I mean, we can analyze this any which way you want, but I think this is deep, and so we'll see what will happen. Keep moving, please, Marcus. Here you have just some numbers on the pandemic. I probably should have had them up front, but you see that our situation is not. We're not doing so well. Some parts of Brazil, probably for the wrong reason, are beginning to perhaps drift towards immunity, but our stats are pretty dismal. This comes from The Economist. You probably see it every week. And one more. Now, finally, response to the pandemic and the budgetary impact. Here you have, and this number is taken from, we have an independent fiscal agency, like a congressional budget office in Brazil. And here's a breakdown of projected crisis spending as a share of GDP. And you see a lot of it is being spent on employment, a good bit on businesses through tax breaks and delays and whatnot. Some money transferred to states and cities, not that much directly spent on health. A lot of money is being spent. Hard to be too critical because it's difficult under the gun to spend well. But there's less focus than was necessary on the credit front, it has proven to be very difficult to reach the small and medium-sized enterprises. I think this is a serious issue all over the world. But still, a lot was spent. I think this was a necessary response. I'm critical of how it was done, but I was one that thought there was no way around it. This had to be done. We wish it might have been done earlier and better, but nonetheless. Move on, please.
What's about the bankruptcy law? Do you have a good Chapter 11 arrangement in Brazil?
We have, but probably in need of some fixing. So this whole notion of whether you bail out companies is a fascinating debate everywhere in the world, I think. In theory, you shouldn't, right? If you have proper Chapter 11 bankruptcy laws. And we don't. We also have a large number of companies that have difficult access to credit. And so there's this issue, what do you do? There's a lot of employment. So the gray areas between supporting people or small companies and directly through, say, subsidized credit that is known to be a losing proposition from a financial standpoint, but a good one from a social standpoint. We're behind on that. And there's some interesting ideas, but they don't seem to see the light of day. So I won't dwell on it. But here we had, and we will have a primary deficit this year of 12, 13% of GDP. It's very substantial. So the issue is, will this be a one-off or not? In theory, it's supposed to be a one-off. Our laws allow for emergency spending at times like this, as they should. But the question is, will we be able to get back on some track? We just don't know. It's difficult to see things getting back on track quickly. If you could move on again. And so our debt is approaching 100% of GDP. An interesting aspect of this that is not on my slides is that the maturity of the debt, as one would have predicted, is shrinking. So there is a sort of a tropical QE, if you will, in the form of the shortening of the maturity of the government's debt. We've seen this happen in Brazil before. And therefore, we're quite vulnerable. I'm not sure whether we are looking at a good equilibrium, bad equilibrium situation, Marcus. I think it's sort of a bad equilibrium or a very bad one as of now. But yes, it is, I believe, highly unstable. It has never been so cheap to buy or to hedge foreign currency exposure. The reserves help. For sure, to stabilize things. But the interest differential has almost disappeared in real terms. So it's very, I find this to be very unstable as can be for a country that has a lot of reserves. The reserves are there. If you didn't have them, I think this would have been.
So let me put some positive spin on it, but if given that the real interest rate is so low, it might go even into negative territory. The debt level is not such a problem compared to earlier times when the real interest rate was tremendous.
Indeed, but if you look at the long-dated tips, see, Brazil is one of many middle-income countries that has 10-year rates at, say, 5 to 7%. You take your pick, all of them. Indonesia, Russia, South Africa, Mexico, Brazil, all of them. So they're lower than Germany, your country, that has negative nominal rates for on their 10-year paper in euros. Yeah. But yes, I mean, we can afford to borrow some, but the interest rate curve is very steep, and for the non-economists that might still be awake, this means that long rates are much higher than short rates. And so a strategy of shortening the maturity only makes sense if you're buying time to fix things. Otherwise, you're just postponing the day of reckoning in the end. But yeah, I mean, it's clear that we do have more room to maneuver than, say, some years ago where we had 10% real rates. Yeah.
So I have a lot of questions by Pedro Duque and Randall.
Let me finish. I'll finish quick.
Okay.
Give me my last
Sure.
slides. Here's a little bit of hope to finish. So anyway, I try to make clear that we have a deficit in leadership. It's shown itself in everywhere pretty much right now. In the pandemic, and in the Amazon, in the lack of conviction about reforming things, in the stress that is being imposed upon our institutions, and so on. Now, what is it that gives me some hope? One, I think our institutions are responding. There is a lot of tension, and there's room for accidents, but I think they are responding. Two, we do have the benefit of a free press, free media in general. They're under attack, but they're there, doing a great job. Three, young people are engaging in politics, and I think that's very exciting. It may not work in the near term, but it's crucial. Some reforms have been done. I think we must not lose sight of that. We've had, since the impeachment of Dilma Rousseff, we've had labor reforms of the BNDES, those two done under her vice president's term, Mr. Temer, and then more recently under the current government, Social Security reform that did about half of the job that needed to be done, maybe a little less. And recently a new law for the world of water and sewage that is a major problem in Brazil. That law just got passed. Needed still our tax reform, both indirect taxes and income tax. Our tax system is a nightmare for businesses and is very regressive. I mentioned the need to rebuild the fiscal framework again. And then I also mentioned state reform. Those are needed. Above all, I think something is not working in our politics. I'm not sure how we're going to move forward, but some reforms have also been voted already, and we will soon see the number of parties represented in Congress decline from 30 to possibly less than half of that. That might be somewhat helpful. That's pretty much what I had for you.
Thanks a lot.
Storm.
Arminio. So I have several questions. So we're running a little bit late. I hope it's okay for you. If I look at politics, it can be, it can be that the political system is not working because, how the constitution is executed, or is it societal tensions that different parts of societies don't have totally different visions how the country should be run? Is it more the former or the latter? If it's the latter, it's much more problematic. If it's the former, you have to fix the political system, but at least society is sticking together.
Yeah, I guess I've always asked the question of, I can see the supply of, call it populism, existing everywhere. There are always people selling you nostrum, simple, easy solutions to everything. And they, once they get into power, they usually last for a while until they go broke. But then the surprise is we keep getting fooled, we collectively, So I don't know. This one is above my level of understanding. I believe there are cultural issues that are often alluded to that make some sense. and they have to do. Some of these things have been with us for decades, maybe even centuries. When I think about that way, I get very pessimistic. I better take the next question.
And somebody would like to know about the prospects of the 2022 presidential elections. Are you hopeful that somebody will emerge to correct all of these things you mentioned before? Or
I am. I don't know if I would say all of them, but at least some. Yes, I am hopeful. It's too early to tell which way this is going to go. The political parties in Brazil have taken a beating. There's been corruption all over the place, spared very few. They're an alphabet soup of names, but there is not a lot in terms of a programmatic view, of an ideological view even. So it's very confusing, and it's not a lot of time. But I have to believe we have so much room to get better that that might happen.
Let's move a little bit into economics and finance. So Randall Henning would like to know about external financial stability. How do you see, the things evolving? What role do you think are the Fed swaps line playing? Is it the U.S. monetary policy is helping Brazil a lot at the moment, do you think? And do you see any, the access to the international capital markets and the rating agencies, do you see any dangers there? At the moment, I think the markets are fairly open.
Look, there's no question the sort of abundant global liquidity is helping us. I can't imagine if we had been in different circumstances. The lines, the dollar lines at the moment are not an issue. And you see onshore rates in Brazil are quite low. The local premium is low. So I think it's fine that they're there. But I don't think that's a key ingredient at the moment. Another point that I should probably have listed in the plus column, if we're talking finance, is our banking system is in good shape. That doesn't hurt. If you also have a banking crisis, people feel their money is not safe within Brazil, then you're toast. But that we also have going for us.
And you think it's a smart move to let the exchange rate, depreciate a lot, because essentially most of the debt is not in dollars, or would you agree with that? Or?
Yeah, I would. Brazil's real is probably the weakest, has been the worst performing currency, I guess, in the planet for the last year or so. But I think that's part of the functioning of a floating rate system that, in my view, has done what it's supposed to do, having, however, stopped short of a panic. So so far so good. I think is a system, but is a healthy response given all the problems we're having to deal with.
Some other people would like to know, like Patrice Robitel, would like to know whether the central bank should have gone into QE measures, given that it's so hard to place longer dated government bonds. Should the central bank help out if nobody else wants to buy it?
So this is a hot topic in Brazil because some people think Brazil can just print money and be happy. The QE that's done in Brazil is the shortening of the maturity and the duration of the government's debt. And we're seeing both take place. The central bank is now allowed to intervene directly in the government bond market. It hasn't done so, and I think they're wise not to. They might as well save their ammunition. That's the QE we can do, and it is being done. As I alluded to earlier, it is a way to buy time, but you become more vulnerable. The more you have to roll over your debt, in the short term, the more vulnerable you are to runs. So yeah, the issue of printing money that is or was somewhat in fashion in the U.S. as well doesn't really apply because rates are not at zero. So you can't print money and keep rates at 2. So the folks who are saying print money, they're basically saying take rates down to 0. I personally have nothing against it if inflation targeting so recommends, subject to reasonable risk management. But we're not there, and I don't think we're going to get there. So that part of the sorcery will stay in the imaginative minds of folks who would like to fix Brazil without really fixing things.
So in terms of the inflation, I mean, it's very crucial to keep the inflation anchor. What would happen? What needs to be happening in order to destroy the inflation anchor? Do you see any dangers?
Well, we have a lot of experience in living with inflation and recession at the same time. So having the sort of depression is no guarantee that this will be safe from an inflation standpoint. And here you're back to the discussion that you alluded to in your introduction of fiscal dominance and so on. The fact that we have a lot of reserves helps. The fact that the banks are healthy are a plus. But given the depth of the recession, we might have had, inflation could have been lower given how bad labor markets are. And so at the moment, we're okay. It's just not very stable. That's what bothers me.
Okay. Can I also come back to the social mobility figure you presented? Is it the case that the social mobility, is it more that, getting out of the slums or something is very, very hard, but once you're out of this, then it's easier? Or is it across the whole spectrum where social mobility is fairly poor? Or are there certain areas, from the slums to the super wealthy, where it's much harder? Is it more the lower end where it's much harder to get out, or is it much more, getting to the top 10% is the hardest from, the second decile?
No, it's less hard once you start climbing, but I don't have precise studies to quote from. This used to be the accepted kind of understanding in Brazil. That, in fact, if you ask someone 20 years ago, somebody in the social sciences, they'd say Brazil is highly unequal, but there is some mobility. And I'm not sure where that came from. It certainly isn't there now.
Okay. And you think one big element would be education in order to fix social mobility? What's about finance, access to a bank account? Do you think the digital revolution, fintech,
that
can
we
help?
have. I think that the handheld revolution is there.
Okay.
And it's fantastic to see. No, look, I think education is at the top of the list. We have a British style system on the health front that takes care of 3/4 of the population, but it only gets about 40% of the money spent on health. That is a disaster. That has to change. This system does quite well with the money it has, but that's going to have to change. There's also plenty of opportunities for efficiency gains, for the use of technology. I've been spending a lot of time studying the health front. Then I mentioned water and sewage. Our stats are just ludicrous. Half the homes don't have proper sewage, treated sewage. And then I would add also urban issues such as transportation as well, public transportation. So it's everything, but the ranking would be the one I just described. And in fact, we now have in Congress, this new bill for sanitation, and hopefully it'll mean there'll be a pickup in investment there at some point anyway.
So let me conclude with one final question, still on the inequality. There are a lot of questions what would your approach be to reduce inequality? Would it be more on the taxation side or some other features? And then we always end up with a positive note in this webinar series. And I think you did already end it up with a positive note. Perhaps you have another element saying, okay, here's some hopeful note, given the COVID crisis. Is one aspect one could say that the COVID crisis really makes clear, it reveals the shortcomings of a particular system, or what's going wrong in a country. And it can be used to fix problems because now everybody recognizes these problems. Or it can also be backfiring.
Oh, okay. On the inequality, I think would take a combination of the obvious, say, low-hanging fruit of our tax system being very regressive with a lot of crazy tax breaks, subsidies. We should eliminate all that. I would have higher marginal rates, but I'm not a big fan of the Piketty-like proposals, or even New York pay 50%. But here we're at 27 with a lot of loopholes. I go after those. I think this would give the government the authority to then go after some other things, including the state reform that I alluded to. I think that could generate the money for investments in everything that has to do with social mobility, equality of opportunity. That'd be my, that would be my strategy. So direct, low-hanging fruit, rent-seeking, lack of competition, crazy subsidies. I think there you could do a lot. And then you go the Willie Smith way, where the money is. And the money is in Social Security, the money is in the reform of the state, and then you could free up money to invest in social areas. It could be direct investment by the government, but a lot of it, I think, would be through concessions, and the government would then, because there's such inequality, would have to provide the funding. Now, I think on the positive side, it's kind of surprising that there's still an ongoing reform effort in place. So if we can avoid blowing up again, I think we would be in a position to then go to the next elections and hopefully put things on a better track. I make a prediction here. I think in the end, not only Brazil, but I think the world will be reinventing social democracy, learning the lessons from kind of the last round, learning the lessons from sort of extreme neoliberalism, extreme conservatism. And I actually haven't lost hope. I know that this pleasant world of kind of open societies, democracies, equality of opportunity has not existed for much of mankind's history. But I actually think this is kind of where we might end up going. And Brazil hopefully will figure out a way to jump back into this good train.
Thanks a lot, Arminio. It was, you learned a lot about your country, Brazil, and I think Brazil could play a much bigger role also in the world stage, given its size and its importance, if it organizes itself the way you propose. I forgot to mention initially, and luckily you mentioned it, this was co-sponsored by the Brazil Lab at Princeton. So Brazil Lab is focused on Brazil here in Princeton, and is a place for students to learn about Brazil. And we talked also, Arminio was also talking about the Amazon, and next Friday, Richard Zeckhauser will talk about climate policy, and the Amazon might come up again, but it's more on the policy side. But of course, we have already got a first taste on climate issues. It's only one of the many issues we are facing as a society at the moment. Thanks again, Arminio. Hope to see you soon again here in Princeton in real life. And thanks again for being such a good presenter, and talk to you soon.
Thank you. Thanks for having me.
Thanks to everybody, and hope to see you on Friday for climate policy, and next week then again. Bye-bye.